This week, Ben and I are going to talk supply and demand factors on the global scale in a lot of key trading countries. Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
Good morning, Will. I'm doing great. How are you?
I'm doing pretty well. It's looking like the sun's starting to come up behind you there, so getting a little light. Get ready for another big Tuesday here. But yeah, no, doing well. Went to an LSU University of Texas baseball game over the weekend. That was pretty sweet. But
Nice.
yeah,
How's your basketball bracket doing?
terrible. I had Mizzou in the Sweet 16. Big mistake. Thursday was not a fun day in my household. Well, it was a fun day for other reasons, but I was a little depressed. But that
Well,
is to be expected at
not to brag, but I think this does reflect on me as an economist. But I am in the 99.5 percentile of brackets. So all of my Sweet 16 teams made it.
Wow. All right.
Yeah,
Well, there
yeah.
you go, folks. That's why you should listen to
This is
Ben
the best
Brown.
year. This is the best year I've had, and probably will have.
Yeah.
But yeah, it was a good run. One of my interns selected Mizzou to win the whole thing, and
Ah,
I asked her. I was like, "Are you sure about that?" And she said, "Well, what's fandom if you don't pick the school that or team that you go to school for?" And I was like, "Well." Truthfully, a winning bracket.
yeah.
But anyways, long story short, Mizzou had a good season, just couldn't pull it together at the end.
Well, speaking of winning brackets, there are some slightly winning commodities week over week this week, but largely flat or down. So I'm going to give you a quick rundown on the prices here. May corn up 6 cents at 4.64. December corn flat at 4.51. Soybeans for May down 7 cents at 10.09. November beans down 11 cents at 10.07. Soybean oil on a cents per pound basis for May up 0.42 cents at 42.01. Soybean meal by the short ton down $5.60 at $300.30. May wheat up 1 cent at 5.58. July wheat up 1 cent, 5.74. Cotton for May down 2.1 cents a pound at 65.27. December cotton also down. And then that West Texas Intermediate crude oil contract up $1.41 a barrel at 68.37. So Ben, a lot of losses, a lot of kind of just sideways movement as well. So looking at at your overall takeaway for the market, really not too much motion in the ocean week over week.
Yeah, I'm going to pick on the wheat complex there for just a second. So we take these as a Friday close, and over the weekend and even into Monday, there was a lot of talk around the Russia-Ukraine situation. The U.S. was in Saudi Arabia with Russia trying to broker a peace deal. It seems like there's some movement happening in that market, but that's been kind of bearish to the wheat complex here to start the week. I personally don't know if it does a whole lot to change the amount of wheat on the global market, but it probably does two things. One, it probably lowers the cost of freight if let's just say another negotiated deal, kind of similar to the Black Sea Grain Initiative, comes about from this. That'll lower the freight cost, make Russia wheat more competitive on the global market. The reverse of that is it probably strengthens the Russian ruble a little bit, which makes wheat a little less attractive. So maybe some offsetting factors there, but I certainly think the lower freight rate has a potential to help move or make Black Sea wheat more attractive on the global market.
Ben, even expanding beyond the Black Sea region and the impact that we might see there. In your weekly write-up this week, you focused very heavily on international supply and demand picture, or the international supply and demand picture. Looking at key trading partners like China, key competitors in South America, and one thing to note, you talk about the expectation that China's soybean production will drop a little bit and their export demand, or sorry, their import demand will increase. But meanwhile, the picture kind of shapes up to look like a lot of that increased demand will come from the South American area, South American countries as a whole. Where does the U.S. click into, I guess, the evolving picture that is the international soybean market?
Sure. So I'll start with China. You mentioned China there for a second. Yeah. So the expectation for soybean imports during the 25-26 marketing year, which again is the marketing year that'll start, next fall or this fall, is forecasted 106 million metric tons. That's up just slightly from the 104 million metric tons expected this marketing year. So the 24-25, the one we're in right now from last year's crop. Their soybean imports are still growing. That remains below their all-time record high set 2 years ago of 112.2 million metric tons. So still trying to rebuild that back. Now, you asked the question of, yes, it's good to see global consumption for soybeans continue to grow, but is it mostly going to come from competitors? And yes, the answer is Brazil continues to increase their production. If we look ahead to 25-26, again, that would be the marketing year this fall for us. Their marketing year starts in January. So we're just a little under a year away from this marketing year starting. But the expectation is to see soybean production in Brazil reach 173 million metric tons next year. That's up from what is currently expected to be just shy of 170 million metric tons in the 24-25 marketing year. So we just started that marketing year in Brazil. And so, that's an added 3.5 million metric tons of soybean production just from Brazil. And China is expected to increase soybean consumption 2 million metric tons. And so this trend of increasing Chinese soybean demand is good for the global soybean market. It's growing at now a slower rate than what it did, let's just say, the last 15 years. The Brazilian soybean production continues to increase, and for a period of time, we could, even the U.S. could compete in that market share because China was increasing as fast, or if not faster, than what Brazil was increasing their production. The problem now is becoming that China is not increasing as fast, and Brazil is still increasing production at a pretty quick clip. Not as fast as what they were, but still more than we need. So that's one of the challenges we have in terms of getting U.S. soybeans to compete in that picture.
Yeah. Well, and Ben, when you think about the the overall scale of the soybean market and the scale of this production, it kind of makes sense that the lag is moving in that way. For a while, that increase in Chinese consumption was what would naturally be ahead of production, but as soon as that catches up and even moves ahead, now you're going to see a point where trying to expand that soybean market for the U.S. becomes a larger challenge, especially when it's hard to come by new acres and larger production in the U.S. and South America has a lot of that potential still remaining. So it is a little, I don't want to say scary, but it is something definitely to watch very closely as you continue to look at South American production. Ben, I want to turn the conversation over to a trading partner that I feel like doesn't maybe get talked about all too much. But looking at Japan, there's an expectation for them to increase their corn demand, specifically coming off of the HPAI issues, looking at a recovery from high pathogen avian influenza. Ben, are there opportunities to maybe move some more corn into countries like Japan?
Yeah, well, so as it's looking globally at where is the supply and where's the demand going to come, and do we have any advantages of moving product, right? So let me just start with the globe, and then we'll come down to Japan here for just a second. So, for global corn production for 25-26, we're looking at an additional 50 million metric tons. That's kind of what we're looking on the global balance sheet. That's more than what we had this year. 50 million metric tons more than what we had this year, which sounds like a lot, but also that's not a huge increase in that same regard as well. It could be, and we've seen bigger increases year over year. So now let's look at Japan specifically. Japan is expected to increase imports this year due to a rise in feed demand, right? And this is a good thing for the U.S. because we've been competitive historically at getting corn into Japan. They've been a good trading partner for us in the market, and part of the reason why we see them increasing corn demand again is because they're kind of a little bit ahead of us in the highly pathogenic avian influenza, right? So they're kind of like a year ahead of us. So they're rebuilding their laying herd, starting to use more corn for that as well. We see some stability in other demand categories for Japan. And so at the end of the day, we feel that the increase in corn imports that they're going to see are predominantly going to come from the United States, and are expected to rise about 2% in 2005, 2006. So that is a nice place for U.S. corn to compete in that market.
And just as a note, I think you meant 2025, 2026, correct?
What did I say?
That's 0506. We're going back to the early 2000s, maybe.
Yeah, 2025, 2026. Yeah, thank you. Appreciate it.
All right, Ben, well, looking into the rest of this week, what should farmers and ranchers be paying attention to that could move the markets?
Yeah, so I think the markets are going to be relatively quiet the rest of this week, being the calendar week here. We've got some information coming out. I think traders are going to be closely watching any type of forecast coming out for South American weather right now. That corn crop, a large part of it is in pollination stage. So, if the forecasts continue to be hotter and drier, right, I think people are going to be alert to that. However, I think the crop could see some drastic deterioration and not really move markets this week, because everybody's focused on next Monday's, so March 31st, that March 1 grain stocks report, and then also the prospective plantings report. Those will be huge reports that come out at the beginning of next week. It'll have everybody's attention. Look for people to start getting into a neutral position in the money markets at the end of this week, just to make sure that they aren't out too far ahead of their skis, so to say, before that big report day.
Yeah, and then, Ben, as we flip the calendar into April, it's going to be a fun time watching the weather very closely here domestically as well. Well, viewers and listeners, if you'd like to learn more about us and what we do, you can check us out online at brownfieldagnews.com. Also find us on social media, Twitter, Facebook, pretty much everything. Ben, you're very active on Twitter as well. Great information sent out from Ben Brown on Twitter. So what's your handle at Ben Brown MU?
Yeah, I think that's right. Yeah, I don't think there's any dashes, all one word. Yeah.
All right. Well, Ben, thanks for having your knowledge and information here on the program. Again, I'm Will Robinson on Brownfield.